It's Tuesday, June 25th, 2024. A lot to talk about today. Markets mixed, Dow Jones down, NASDAQ up. And as I make this video today, most people probably watching this video today could probably care less about what is happening in the stock market today because in all reality, it doesn't affect them. What does affect them is what they're paying for gas, what they're paying for food at the grocery store, what they're paying to go out to a fast food joint, to a restaurant, what they're paying for health insurance, what they're paying for auto insurance, what they're paying for a new car. These are the things that are really affecting people day to day, not the markets. The markets, again, have fully disconnected from all reality, from the real economy, and from real people. And a couple articles today that I pulled up this morning that I want to share with all of you. And please make sure to like, share, subscribe, comment, and anything you want to comment on. But let me know what you think about some of these articles. Hooters shutters dozens of underperforming restaurants, optimistic for future. So Hooters, the hot wing joint, is going to shut down or is in the process right now of shutting down 40 restaurants. So to me, this is another reflection of the economy and what's happening to the restaurant business, the mom and poppers, the fast food chains, casual dining chains. Here's another one from CNBC. U.S. auto sales are expected to slow during the second half of 2024. How could they not? It says here, vehicle inventory levels are growing without a doubt. In my local area out here, the car lots are filling up. The RV lots filling up. It says here, incentives are increasing and there's growing uncertainty around the economy, without a doubt. High interest rates have tapped the consumer. And remember, there is now a shrinking of pool, a shrinking of qualified buyers in the pool of buyers out there. People who have good credit, people who have a down payment, people who have a job, people who make enough money, who can actually qualify to buy a car. That pool is shrinking. Now, if we go back a couple years ago, everything was utopia in the auto market. Remember, they were charging way above MSRP, all the FOMO that was taking place, all of the free money that was out there. If you were breathing, you could get a car. Now everything has changed. I hope they choke on these cars. I hope they get so many cars on the car lots they don't know what to do with them. These dealers are no friend of the American people, I will tell you that. They really stuck it to people a couple years ago, doing what they did, charging what they did. And then, of course, the quality of most of these cars has done nothing but decreased. So many recalls. You name any maker out there has had major, major recalls. So, you know, in 2021, 22, 23, the quality of trucks and cars just fell off of a cliff. I've never seen so many recalls. Is it me? Is it my imagination? Or have there been more recalls in the last 12 to 18 months than ever before? Every day it seems like another recall is coming out. But again, they just stuck it to the consumer, and now they don't know what to do with these cars. Anybody paying over MSRP or MSRP, you are paying way too much. I wouldn't buy a car unless it was way, way under MSRP. Don't forget what they did to you a couple years ago. Here's another one from CNBC. Housing market to remain stuck until at least 2026, Bank of America says. What do you think about this? We keep hearing about home prices at all-time highs, home prices at all-time highs. Well, that's great, but home sales are at all-time lows. I think that we're looking at 4 million plus, 4 million and change in home sales this year. And that is really very similar to the number that we saw in 2008. So you are witnessing a housing collapse, a real estate collapse taking place right now. Same thing with what's happening in the auto industry. More and more inventory is hitting the market. you have less qualified people that are able to afford to buy these cars, buy these homes. Credit's being destroyed. They don't have down payments. They don't have enough income to qualify. And of course, the mortgage rates are near 7. Interest rate to buy a car, depending if it's new or used and what your credit is, very, very high. People just cannot do it. People have way too much debt now to be making large ticket purchases. So you're going to see more houses piling up on the MLS. You're going to see more cars piling up on the dealership lots. Here's another one today coming from The Hedge, and this was very interesting because it is another telltale sign, another canary in the coal mine of what's happening. Pool shares plunge as full-year profit forecast slides on dive in consumer spending. Pool Corp, the world's largest wholesale distributor of swimming pools and related outdoor living products, with hundreds of stores in North America and in Europe and Australia, slashed its full-year earning forecast, signaling a broader consumer downturn theme. The stock today is down around 8%. Consumers, no doubt, are much more cautious about spending on big-ticket items. Cars, trucks, houses, swimming pools, outdoor living projects, outdoor kitchens, outdoor furniture, all this stuff. People are now pulling back. And I think if people could still do it, they would. But the problem is they're tapped out. They don't have a way to do it. They cannot access cheap money. The credit cards are tapped out. Now people are making real life decisions here, whether do we eat and pay the electricity bill, or do we buy patio furniture? Do we put an outdoor kitchen in our backyard? Do we build a swimming pool? The answer is no, because people now are making a choice to feed their families, pay their utility bills, and hope that something is going to change here very, very quickly. So big ticket items, again, RVs, boats, cars, trucks, houses, swimming pools, outdoor living projects, everything now is on hold. It says here, forward-looking pool units down 15 to 20%, net sales down 6.5%. Forward-looking at remodeling activity, that is down as much as 15%. Net sales for remodeling down 6.5%. These are very substantial numbers, and it's going to get much, much worse. I remember looking at these people on social media that were buying pools and having pools installed in their backyards just a year or two ago. And I'm just thinking, these people are out of their mind. Do they not know what is coming? And, I guess a lot of people, many of you, most of you, without a doubt, saw the writing on the wall. And that's why you've been preparing for many, many years. Many of you preparing much longer than me. Many of you much more prepared than me. Many of you much more knowledgeable about what is going on than me. And I commend you. And I respect all of you for doing that. But it's astonishing watching people literally a year ago believe that, pumping $7 trillion into the economy, telling people not to go to work, not pay rent, mortgage forbearances, go buy a car, run up your credit cards, credit card debt at all-time highs, that just watching this a year or two ago, and people still outspending, buying swimming pools, buying new vehicles that they could not even afford, and just living in this make-believe world, this utopia, how people could not read the writing on the wall, have no idea. Thank God that 98 or 99% of you watching this video were able to read the writing on the wall, and you're preparing. And remember, if you're just tuning in today or just recently, do what you can right now to make a change and start preparing for what is coming. I don't know. Nobody knows when this thing is going to officially melt down. It could be a year from now. It could be 5 years from now. It could be 5 months from now. It could be 5 weeks from now. I don't know. Take every day that you have and use it to protect yourself mentally, physically, spiritually, and financially. Every day we've got to be walking the walk. We've got to be living this lifestyle now of preparation. Banks are quietly dumping real estate loans. The extend and pretend is running out of steam, according to this article today. Big bank losses are coming, as many property owners, especially owners of office buildings, are going to default on mortgages. We're watching this every day. You've seen so many of these commercial buildings in Chicago, San Francisco, New York, selling for 50%, 70, 80% off of what they were bought for. Banks have been extending the time that struggling property owners have to find rent-paying tenants for those half-empty office buildings. And guess what? They're not going to find tenants to occupy these buildings. Once banks foreclose on a delinquent borrower, the theoretical loss turns into a real loss. And that's what they've been putting off. They don't want to foreclose because it becomes reality. It becomes a real loss at that point. And the longer they can extend and pretend and not have to report these losses, the better. But it's imminent. It's going to happen at some point. And they keep putting this off, extending all this. And at some point, they're not going to be able to do this. And you're going to see a lot of these smaller and regional banks decimated. They're going to go under. They're going to be taken over by the bigger banks. It is really a historic time. Globally, it's a historic time right here in America, watching what is happening to the U.S. economy, the U.S. worker, the consumer. There are still people that write me. You've seen them in the comments. Everything in my area looks great. Everything looks fine, and so they're really fooled because they see people at a hotel or people at a restaurant or people driving down the street or people at the mall. They believe everything is okay. You got to ask yourself, how are most people paying for this? Go to a gas station. You're going to see a lot of people that are only able to put $5 or $10 in their car. As long as people have access to the, 827 million credit cards floating around in the United States, they're going to still use them until they can't. 1 in 5 credit card holders is tapped out. 20% of credit card holders are tapped out, ladies and gentlemen, right now. And it hasn't even gotten bad yet. 20% are maxed out. That is an enormous number, and we should be very, very concerned because it's telling us that people that are out there shopping, eating, vacationing, flying around, they're not doing it with money they have. They're doing it with money they don't have, and they're going deeper into debt doing this. And somebody's going to be responsible when all these people default on this debt. Banks will need bailouts. Guess who bails the banks out? You and I do. But again, it is just a reflection of the economy that people don't really have the money. They're spending money they don't have. They're going deeper into debt. And the entire country is going deeper into debt. And the financial institutions are very, very vulnerable. And it's going to affect everybody. So either people begin to get responsible, the system begins to get responsible, and we try to fix this, or the whole thing is going to implode. And the whole thing is going to implode because you're not going to see people take responsibility. You're not going to see the system take responsibility. The system is going to continue to print money. People are going to continue to spend money they don't have. People are going to fight inflation and their lifestyle every inch of the way with credit cards, and they're going to go deeper and deeper into debt, and it's going to be a very, very awful time, a nightmare for many, many people when they're maxed out and they have nowhere to go, no way to pay the bills, no way to eat. Homelessness isn't shrinking, ladies and gentlemen. It is growing to record numbers. Kevin O'Leary slams Wasteland, San Francisco, over store closures, bad policies. He says it's not America anymore. When you look at some of these cities like San Francisco, LA, parts of Chicago, New York, they do not look like America anymore. There are many parts of America that I see that no longer look like America. They look like war zones or third world countries. Kevin O'Leary says this, you wouldn't run a convention in San Francisco. You'd have to take an Uber 1 block to your hotel or you get executed. You get executed. California, ladies and gentlemen, is going out of business, and many, many other states are going out of business also. We're running a big deficit now, just like many other states. Crime is out of control, homelessness out of control. debt out of control, just like many, many other states. And this is just growing like a cancer across America. And it's going to affect, I mean, this is the sixth biggest economy on planet Earth right here in California. If it goes deeper into debt, it becomes a state that quite possibly might need a bailout at some point, a state that is literally going bankrupt. Do you think it's not going to affect the rest of America? The sixth largest economy on planet Earth isn't going to affect the rest of America running this much debt, these type of deficits here. I think it's going to be a big problem that is going to affect other parts of the United States of America. But it's not just California. You look at Illinois, you look at New York, you look at Philadelphia. There's big problems all over the United States. But this is a huge economy here that I think is going to have ramifications for the rest of America. Here's another one today. Maybe some good news here on CNBC. Judges halt key parts of administration student loan forgiveness repayment plan, risking relief for millions. I truly believe that I should not be responsible to pay other people's debts. I'm sure you would agree with that. Two federal judges have blocked significant parts of the administration's new student loan repayment plan. The preliminary injunction stopped the U.S. Department of Education from implementing provisions of the Saving on a Valuable Education, known as SAVE. The administration also will not be able to forgive any more debt under the plan until the cases are decided. I think that's great news. And again, I don't believe I should be paying somebody else's college tuition debt, especially a doctor or an attorney making $300,000 a year. Why would I be on the hook for this? Why would somebody who decided to say, you know, maybe I'm going to go be a plumber or an electrician because I really don't want to get into college tuition debt or I can't afford it, why would those people be responsible to pay for people who did go into debt going to college? And for most of the people that went to college and found out that their degrees are pretty much worthless, I'm sorry that you got bamboozled. I'm sorry that you partied for 4 years and now want to slap us with a bill. I think this is absolutely criminal. Next, we'll be paying off people's homes. Maybe we should be paying off people's car loans. I mean, where does it end? People need to take responsibility for the things that they sign and the obligations and agreements that they make, in my opinion. CNBC, Fed Governor Bowman says she's still open to raising rates if inflation does not improve. The time, she says, is not right yet to start lowering interest rates, adding she would be open to raising if inflation does not pull back. What do you think about that? Will we get a rate hike in July? Will we get a rate hike in September? I don't think so. Or, excuse me, a rate cut. I don't think so. I think at most November, December, you could see a rate cut. Will we get a rate hike this year? I don't think so. But as far as rate cuts go, July, no. September, they're really hoping for a September rate cut. I still don't think it's going to happen. We'll see the data that we get. But I think the earliest would be November, December, if we even get that. Now, I'm going to close with this last article. Also coming from The Hedge today, central banks' appetite for gold isn't or hasn't been satisfied. Central banks keep gobbling up gold. Why is that? Their appetites for the yellow metal aren't going to be satisfied anytime soon, the article says. This was interesting. 32% of central bankers surveyed admitted that de-dollarization was a factor in the decision to hold gold. And the article goes on to other reasons of why these central banks are holding gold. This is just some of them. They worry that the U.S. could use the dollar as a foreign policy weapon. Well, you don't really have to worry about it because we're already doing that. They're holding it as a hedge against inflation, and it is a long-term store of value. These are the reasons central banks are holding gold. It performs well in times of crisis. Just look at the history of gold. It's a portfolio diversifier, and of course, concerns of sanctions. So these are just some of the reasons. If you get a few minutes, check out the article. I want everybody to not listen to me. Check these articles out. Take the time, Google them, read, take 5 minutes, do your own homework, do your own due diligence. This stuff's really, really important, but I believe that gold is going to be one of the most important things to own here going out. I still think it's extremely cheap. Bitcoin came back a little bit today. Gold down, silver down, Dow Jones down, NASDAQ up. So things are very, very mixed. Again, most people do not care what's happening in the markets, but most people should care if they own some tangible hard assets like gold, like silver. This stuff is going to be very, very important as we head into, I believe, the worst depression the United States of America has ever seen. I believe we've already entered that. We've got a ways to go before it really gets bad, before this meltdown really takes a hold, takes a grip on the U.S. economy, but it's already begun. You're watching a death by 1,000 cuts. You're watching people lose their jobs every day. And this is a really frightening thing now, because now as we're in summer and things are heating up, we're going to see more and more job losses throughout the summer, right into the fall. And no matter where mortgage rates are or where interest rates are, it doesn't really matter. When people don't have a job, when they're not working, they're in big, big trouble. So, do everything you can to keep your job. If you can get a side hustle right now and you can raise some capital, I would surely be doing that. Build up the war chest the best that you can right now. There's going to be opportunities. There's also going to be a lot of danger out there also. I watch other videos and I watch the news and I talk to people, and too many people, as I close out today, too many people just think that this is going to be a walk in the park, that this is just going to be an economic collapse. And if you have some cash, you can go buy a boat or a jet ski or a house or a duplex and ride off into the sunset. This is not going to be that easy. You're watching a demise now of society. And you're going to see really Mad Max type of events take place in America. Yes, there will be sales. Yes, you can buy a jet ski cheap. Yes, you can get a boat cheap. Yes, you can buy a car cheap. The sales are coming. There's no doubt about it. But you better be aware of what comes with it. I talk about it. If you see gold breaking $3,000 an ounce, if it goes to $5,000 an ounce, think about when you walk out the front door of your house, what you're entering into. $5,000, $4,000, $5,000 gold, you're in a Mad Max situation. It's going to be very, very dangerous out there. It already is. It is extremely dangerous now in most of America. Think about, as this economy worsens, you got your jet ski half off, wonderful. Can you protect yourself? Can you protect your assets? You gonna be able to ride your little jet ski and your boat around with what's happening in the world, when people are starving, when quite possibly people aren't getting their government assistance and their food, and they're angry and they've lost their jobs and maybe they've lost their pensions? You can be riding around your little jet ski, your boat. I don't know. I hope you are. I hope it doesn't get to that. I don't want to see $5,000 gold. I really would like to see it back under 2,000. I would like to see things die down and ease up a little bit, but that's not going to happen. Gold is going to go much higher. Society is going to continue to collapse. The economy is going to get much worse, and things are going to get much more dangerous. So, yes, sales are coming, but danger is coming too. Make sure you can protect yourself. Make sure you can defend yourself. Lionel made a really, really good point yesterday, and he said, it doesn't matter how much weight you can lift. Anybody can be knocked out. So make sure you can protect you, your family, your assets. Because, yeah, it's great. Everything's on sale. But if you can't protect it, if you can't walk out your front door, what good is it? So make sure that you're investing in yourself, your skills, your health, mentally, physically, spiritually, and financially. God bless all of you. Have a wonderful day. Be careful out there. So much happening. And we're just now entering summer, so it's going to be very interesting. We've got the debate Thursday night. That will be very, very interesting. So a lot of things coming. We're going to see a lot of things happening this summer. So pray for this country, and most of all, be walking close to God. Talk to all of you soon.